don't know the answers for things, which is, but if we recognize something that the market is in fact valuing, we need to pay attention to it and, not use it necessarily as a system for entering and exit trades, but another piece of the puzzle that says, here's a small piece of information that says, NVIDIA is pulled back to this level. Would it make sense to short this stock right now where there have previously been buyers? I also pointed that out yesterday in Ford. In Ford, if you go back to that one, I mean, that was just, unbelievable how, February of 2021, buyers, showed up in there, then in April, May, and then again in, August and September, they wouldn't close it below that January 2021 VWAP. And, just yesterday or Tuesday, and then again today, it's touching that VWAP once again. So if you look at my Twitter, you'll see that, I posted that. Let me retweet that. Here it is. I just retweeted it right now to bring it to the top. But, it's pretty amazing how well that seems to be, holding as a relevant level for, so far, 8 weeks into the year so far.
I just went ahead and put that into the top as well so people can see it in there. Okay, perfect. All right, so for everyone in the crowd, I did put out a tweet asking for specific stocks. Let me go ahead and pin that up top. So we've got Brian for I think about 30, 40 minutes here. So if anybody wants to have their stock analyzed, right now I only have a couple sent to me. So this is your chance. If you want to get to there quicker than others, just go ahead and comment whatever stocks you would like below. And I did get one of the DMs, but please just put it on that post. I will see them on the post. That is the easiest way to get them to me. So I want to start out real quick with the chart of Amazon, which after spiking up last night has now kind of continued that spike and is up another few percent today and is about to reclaim, or looks like it's aiming to reclaim, that 3K level.
Yeah, well, again, we've still, look at just a 50-day moving average here. It's been an electric fence for this stock. It's rallied up to it on, basically 3 occasions this year and got rejected pretty quickly from that. And that 50-day moving average is still declining. So, to me, it looks like, Amazon broke a very important level of support at about 3,200, 3,150. And that is where we now have found, that prior support acting as resistance pretty much all of February. And again, we're below declining 20 and 50-day moving average. So, support down near 27. It looks kind of, in a big range here, but that range is occurring, below a declining 20, 50, 100, 150, and, even a declining 200-day moving average. So I think that this rally, based on the stock split and, whatever else their buyback they announced yesterday, doesn't change anything structurally. We're still in a downtrend and, maybe finding stability, but just these huge ranges to me make it so that if you're going to trade it, you've got to be very short-term oriented. It's to me, it's a stock that I look at and say, I really don't see an advantage to be involved in it. I'd like to go to a stock where, things are a little bit tamer and seem a little bit easier to manage risk in.
Okay. Yeah, that's pretty fair. Evan, I'm going to involve you in this one a little bit more than usual, too. I'd love for you to throw out a couple, and maybe I'll even try to input a couple of my thoughts, play Richard for the day as well.
Awesome. All right. Love to hear that. Well, there's no place I could start with without going to Apple. So we'll start there.
You first, Brian.
Oh, I'm sorry. I thought he was going to talk about Apple. Apple's also, showing a little bit of worrying signs. It's maybe distributional up here. The most recent, 2 rallies ago, we were trapped by the declining 50-day moving average. The one last week got trapped under the declining 20. just a little bit more neutral here. I think the risk is to the downside. And if they take Apple down, then it's kind of one of the last leaders to fall. And, when they do that, it could be more of kind of, when they take that down, it's, as we know, it's often viewed as a flight to safety where institutions can put a lot of money to work quickly. So if they start taking money out of that one, it might end up that, it breaks down to the same thing. The volume weighted average price from the beginning of last year, which is about 145. And if it did that, I would think that the market would probably start to find some stability, because once you sacrifice, the real leaders, then you're pretty much towards the end typically of a sell-off. And we've seen all the most speculative names roll over first. The defensive names come into play on the upside. And this leader is still holding up. When they take it down, if and when they take it down, then, towards that 145, 146 level, I'm not a buy the dip type of person, but I know that a lot of people like to buy the dip in Apple because it's, the biggest, strongest company on the planet. That might be the better place to look to buy this. But for now, I would hold off on looking to buy it.
Yeah, I've heard more negative sentiment around it right now, especially from a technical setup. All right, another one coming at you, Brian, is Comcast, and I asked about it as a potential short here on Comcast, which I didn't realize until I looked it up as just the weirdest ticker.
Yeah, it's clearly in a downtrend. So I like the fact that they're asking about it as a short sale. It's, below it's been trapped this whole week. And last Thursday, Friday, Monday, Tuesday, and Wednesday of this week, it was unable to even, poke up through that declining 20-day moving average. It's as if there's a sell program at the 20-day moving average, which wouldn't surprise me if that is the case, the way it was able to, to cap the stock like that. Today it's broken down, and this prior, we've seen, late February into the last, first week and a half of this month, that 45.75 to 46.25 has been the band of support. That band of support broke. So I think it is a good short sale candidate with a stop probably about $46.45 or so. That's approximately where we see the 5-day moving average and the week to date volume weighted average price. So if it were to get back up, even above 46.10 or so, if it was to get back up through there, today might be just a little bit of a shakeout. But, the primary trend is lower. It's guilty till proven innocent. It's correct to look at this as a short sale candidate, not as a bargain.
Okay. Yeah, definitely. If other people have ideas for shorts, feel free to throw those in as well. And just, denote that it is something that you're looking at as a short play. All right, let's look at a couple more here. I'll actually throw out a couple more as potential shorts and get your thoughts on them. Let's go with the S's. So SE and SQ.
SE. The problem with SC, it's clearly in a downtrend. But, after dropping from 370 down to 97, it just seems late to the party here. And in particular, just the fact that, February 28th, it was 150 and it's dropped to 90. It's dropped 60 points. So, short term, I think it's a little oversold, and probably, this is where I think a lot of shorts might start to cover. And, if you were to get a bounce, I think you could get a pretty good bounce in this one, perhaps up towards even 110-ish. That's just a little bit too late. The danger down here is that it's been down so long. It's still guilty till proven innocent, and I would prefer to see another spike rally, spike similar to, we saw late February. We saw a rally from 115 to 155 in the period of, 3-4 days. And, 3 days actually. So if we saw another one of those types of rallies, I would then be looking for that to roll over and look for a place to short rather than shorting it way down here. and I haven't looked at Square, but kind of the same thing. The last bounce came right up to the 50-day moving average last week and a half, 2 weeks ago. It spent 2 days basically right there. It's fell back down. I think, was that an earnings report, Gav?
I think it was.
On February 25th. Well, since that, gap, we've seen now that, the volume weighted average price from that is capped the stock yesterday. So, back below today's low, this might be a good short sale, with a stop, I would say, above yesterday's high, would be the way to trade it. So today's, it's making an inside day. So, which means today's low, for those who might not be familiar with the vernacular, today's low is higher than yesterday's low, and today's low is higher than yesterday's low, and today's high was lower than yesterday's high, meaning when you look at the candle, it's completely inside of what we saw yesterday. And that often comes at a near-term turning point. So I think breaking below today's low with a stop above yesterday's high, you could look for this thing to drop back down under 100 and perhaps even go test the low prior to the earnings report down near about 85.
Wow. Yeah. It just continues to just get crazily beat up. Okay. Let's pop on over to Tesla.
Tesla, yeah. So, here's one that's been holding that January of 21 volume weighted average price. We did close 1 day below it, but we just bounced from it on Tuesday. And, you look at this again with a 20-day moving average, it looks like there's a sell program that is, saying sell our position while it's at the declining 20-day moving average. We hit it today, yesterday, Monday, last Thursday, last Wednesday, last Tuesday. It was unable to pierce that declining 20-day moving average. So it looks vulnerable to me still. The only issue I have with, shorting it is that, a couple of things, and sometimes I'm aware of the fundamentals and it gets me into trouble because it prevents me from shorting something, with gas as high as it is, and people in the, Biden administration touting, EVs don't face the problems of, these higher gas prices and, just, common sense that, the markets are trying to pivot towards clean energy makes me think that, this is one of the stocks that more institutions would be willing to hold on to during this, type of environment than go ahead and just throw it away. I'd say avoid Tesla here. The prior resistance from last April and last October is also, trying to find some support in this area. So I don't know. I just don't see an edge either direction here.
Yeah, it is kind of wavering right here. So respect it, not wanting to just dive in and take on any risk. All right, let's go a couple high risers here. Let's do DWAC, which, kind of had been running and I think went all the way up that one day to not that far back. What, it hit 140? And then, over 100 again, and then now has kind of fallen from there, and CFVI along with it.
Okay, it looks like DWAC, the balloon has been popped here, and sellers are, getting pretty aggressive on this. I guess that, I just saw some headlines that, Trump's social media thing has basically been a flop. I have no idea. I don't look at it. I have no interest in it. The VWAP from the beginning of the trading in this, from its SPAC, is down at about 62 right now. So you might have downside still to about 62. That would be the likely place, I think, that it would get a bounce, just an oversold bounce. But shorting it here right now wouldn't make sense with it down 10%, from the high of the day. It's already down too much. If you're short it, I would probably say I would want to have a stop above probably right around 71 and a quarter because it's getting a little stretched to the downside. So now's the time to start thinking about where you lock in some gains, because if it gets a squeeze bounce, it could go to 80 very quickly. But I think it's more likely it first tests that 62 level and then, gets a bounce. But looks like, again, the pin has been popped here, or the balloon has been popped. And CFVI is they're the same type of thing, right? And, this one had its this is yesterday's news. This one's just dead. This is, a complete avoid in my book. It's coming down to a level where it's found support before 10.5, 11. But, it had its chance to do its thing. It way underperformed, DWAC. It's, close to 75% off its highs, and it doesn't look like a good place to buy it. To me, it's dead money. You're going to have to wait a long time to see this thing, try to make headway again. It's broken. I think people are just going to look at this thing and throw it away. It probably drifts down towards 10 over the next couple weeks, months, and probably even lower.
Yeah, I think when people are buying into that one, I guess hopefully they're definitely looking into like what's going on with the actual company as well. I know that there was a lot of bullishness, but yeah, it's certainly just kind of cratered, similar to that DWAC bubble right there.
Yeah, they were the new YouTube, right? I mean, how many new YouTubes have we seen over the years try to compete against YouTube, and YouTube's still the leader, and it seems like, everyone's on YouTube. No one's going to, what was it called, Rumble or something like that?
Yep.
I checked it out. Someone, when the stock was running, people were saying, "Hey, Brian, get over there and post your videos because there's not, much stock content over there." I posted 2 or 3 of them, and I think they got 1 view. I think it's when I went to look back to see if anyone viewed it, and it auto played, and I became the 1 view. So I gave up on it quickly, just saying there doesn't seem to be an appetite for it over there, and I don't know. I'm not a gamer, so I don't understand that world, and maybe it's good for that, but the stock certainly says this is a has-been.
Very fair. All right. We've got more. Again, if people want their stocks to be charted or hear about them, it's the last pinned tweet up top. Just drop a ticker underneath. Here's a couple from there. Let's do ENPH and BKNG.
What was the first one? I'm sorry.
ENPH, it's Enphase.
Yep. And Donkey Kong. Okay, ENPH is trying to recover. I mean, it's just come from 120 to 180. So it rallied 50% in the last 3 weeks in an overall bearish environment. Looking at the weekly chart, this thing's just a real volatile stock. I mean, the daily percentage ATR is 8.5%, meaning the average daily range for this stock is 8.5%. That's a huge ATR. So when I look at that, it says, one, you've got to have a high appetite for risk. This thing has huge swings percentage-wise, and especially on a stock this price. But, the 50-day moving average is still declining. That's a strike against it. Where we were 50 days ago is basically at about 185, and there's about 5 or 6 days that we're going to see this 50-day moving average will continue to decline. Let me put a VWAP off of that high this year. We actually made it above that, which is kind of surprising. I would say, buying here looks to me like chasing. It's, yes, it's an energy name, but it's just rallied 50% in 3 weeks. If I was long this, I would say a worst case stop would go under the low that, for someone who's holding on for more than a swing trade, a worst case stop will go below the low it made this month on the 4th, which was about 152.5. For a tighter stop, I think today might have been a little bit of a shakeout. And if it's truly a shakeout here and headed towards about 190, then a stop under today's low of let's just call it 169 would make sense. But even that, a stop of 169, that's 10 points away. And again, it just shows you, here's the percentage. It trades in an 8% range each day on average. So getting a little extended. Be careful with new purchases if you are, have a tight stop. DKNG, the way that this stock trades and Penn, it reminds me of the cannabis names. Look at CGC and what it's done since 2021. It's just been in this horrific decline, and it gets some spikes once in a while because some state legalizes weed or decriminalizes it, and everyone gets excited, and then they just start selling the stock, the weed stocks off again. And look at this stock. Look at CGC. In particular, in relation to where it's found supply, and in relation to the direction of the 50-day moving average, and then look at DKNG. It's another, they're kind of the same type of business in that they're these so-called sin businesses, weed and gambling. The stock is in a clear downtrend, so there's no value here that I can see. Maybe there's the revenues and earnings or whatever. It doesn't seem to matter. But just the spike that it saw a couple weeks ago, at the beginning of this month, came right up to that declining 50-day moving average. And then it took a couple days, to roll over up there and continued the downtrend, which it's supposed to do. Stocks in downtrends are guilty till proven innocent. And, whether it's an uptrend or downtrend, the trend once established is more likely to continue than it is to reverse. If it, begins to stabilize in here, maybe it'll take time. Again, one of the phrases I like to repeat is if they don't scare you out on the way down, they'll typically wear you out. These things don't just turn right around. Sometimes they do. It's not often, but the odds aren't good for it. I'd say, I wouldn't be a buyer. If I was a buyer, a stop would go below today's low. I would keep it on an incredibly tight leash. But it's in a downtrend. Why bother trying to, pick the low? Nobody's done it really yet so far. I don't think that, no disrespect to the person asking, I don't think that they're smarter than the rest of the market if they're looking for a place to buy, because I've seen people talk bullishly about this for the last, 6-8 months. Every time it goes, hey, the Super Bowl, we're going to get, big action. These stocks are a buy in front of the Super Bowl. And, nothing happened. So it's broken. Leave it alone.
CEO said?
What was that?
Did you see what the CEO said?
What did he say?
So this was yesterday. DraftKings CEO says people selling his company stock will regret that decision more than any other decision you've ever made in your life. Quote.
Oh my God, that's the kiss of death for this stock. Anytime a CEO comes out, except for Elon's the only exception here, that anytime a CEO comes out and says stuff like that, it usually antagonizes the short sellers, and they get the upper hand because they control the supply and demand and not the CEO. He's just a PR machine who's going to say anything positive. He's trying to be Elon Musk, but he's not. No one is. I would fade that CEO all day long.
Yeah, definitely. I don't know if it was the best choice of words, but I see somebody just commented DraftKings just popped on the baseball headline. You saw they agreed. Evan, you tweeted this out, right, about baseball?
Yeah, that the MLB, they agreed to a deal in principle to start spring training going.
It popped, and it's right against the week-to-date volume-weighted average price, which was the exact high on Monday, the exact high on Tuesday, the exact high twice on Wednesday. And so far, it hit that perfectly. So there's net sellers this week, and they're using that opportunity. It looks to me like an opportunity to, unload their shares.
I hear. Hey, Brian, I want to take a second to pause from just the tickers. And a lot of people are curious, right? We throw out a ticker, you kind of give your analysis, but what is the setup that's on your chart? So you're using TrendSpider, right?
For this, I actually have a screen of TC2000 where I can spread it out on several monitors. I've got the equivalent of, I guess, 5 monitors here. And on here, I have a weekly chart that anytime I type in a symbol, it auto populates all of these time frames. So I have a weekly chart. I have a daily chart. I have a 65-minute, a 30-minute, a 10-minute, and a 2-minute. So when I type in a symbol, I see all of those simultaneously. So I can get a feel for what the big picture is, with that weekly time frame. Then and I have on that weekly chart, I have a 10, 20, 30, and 40 week moving average, which of course are the 50, 100, 150, and 200 day. On the daily time frame, I have a 20 and a 50-day moving average. I have the volume weighted average price from the beginning of last year, and I have the volume weighted average price from January 1st of this year. On the 65-minute time frame, I have a 10 and 20-day moving average, along with a volume weighted average price from the beginning of this month, from February 24th and January 24th, because those were important lows. On the 30-minute time frame, I have that 5-day moving average, a week-to-date volume-weighted average price, the February 24th volume-weighted average price, and the month-to-date VWAP. On the 10-minute time frame, I have the 5-day moving average. I have a 2-day volume-weighted average price, today's VWAP, the week-to-date volume-weighted average price. And on the 2-minute time frame, I have the 1, 2, 3, and 4-day volume-weighted average price levels, along with pivots.
Wow. I am very sad that I forgot to hit record on this so that I don't have that to set up my charts with later. I might have to touch base with you on that.
I'm happy to send you this screen.
Ooh, that would be very, very clutch. Thank you. I appreciate that. Okay. We can pop back into a couple of these, but I definitely just wanted to give people a kind of a peek into what you're looking at. All right. Let's take a look at a few more of these. All right. So in addition to DKNG, we do have BKNG, which is booking. And we also have C, which I believe that's Citi? I think so.
Yeah, BKNG. This one is sitting, right on. So I'm looking at the weekly chart to start here, and it's, it's really choppy just overall in that weekly time frame. It doesn't have a nice, consolidation and run. It's just kind of all over the place. This sell-off here over the last 2.5 weeks has brought it down to the volume weighted average price from the COVID low. So that's, I failed to mention that on my weekly chart. In addition to the 4 moving averages, I have, as I mentioned, the year to date volume weighted average price, last year's VWAP, and then the volume weighted average price from the COVID low, because the COVID low in BKNG, the COVID low, I anchored it to the March 27th week. It was tested on April 24th week and then May 15th and had a very strong rally, the BKNG did from there. And then over into October of 2020, it pulled back down precisely to that COVID VWAP again, and then another huge rally. Most of it occurred with a gap. And now this pullback has come down and is trying to stabilize right at that, that volume weighted average price is actually right here at 2020. So it overshot it on the downside, and now it's trying to stabilize in here. But this level is also, if you look at that weekly chart, we had prior important support at about 2100, from the middle of last year and then late last year. And then this year it broke that. So to me, BKNG is broken. I would stay away, use rallies to exit any long positions you have. If they don't scare you out here, they're going to wear you out. And Citigroup is in worse shape. It's, it tried to hold its COVID low VWAP on December. It did, in fact, December of last year, but this time it just sliced right through it, and that volume weighted average price from the COVID low is about 59, and here we are at just 54.76. It's, it's had a strong decline. I think that if it starts to stabilize and you get a rally, the rallies are more than likely going to be met with supply. The 20-day moving average is way up at 61. That just tells you how quickly it dropped. So, it means that it's possible we could get a decent bounce here, and I would use that to exit long positions.
Okay.
And perhaps even, wait for it to roll over and look for short opportunities.
Interesting. Brian, do you have any open positions currently?
I do. I had tweeted about XLI. I'm short that. XLI is the ETF. It's a, what do they call this thing? Select Sector Industrial ETF. I'm short basically right about this price. And that looks like it's just on the precipice here. I'd mentioned that, I think a worst case stop probably goes actually above yesterday's high, which is 99.61. So maybe a stop near 99.65, risking about $1.30 here and about $1.25. And, this thing could be headed back down towards 94.95. It looks like to me. That's the, that's where it kind of, there's a volume weighted average price from the high in June of 2020 that had acted as a place for buyers October of 20, and then just 3 weeks ago. So that is actually at about 93.5. So, if it was to come down to there again, that would be a really nice trade. I'm also short some PING. This is Ping Identity. If you look at the weekly chart, we had a big level of support around 22 that held for about a year. We broke below that. It rallied up and held as resistance, and now it's just getting ready to roll back over again. It's not being cooperative so far. I'm short, same thing, right around in this area. Stop above yesterday's high. I'm long URA. We discussed that one last night. This is a uranium ETF, and I got involved in this yesterday at 25.04, and I sold a third of it at what price? At 25.94, just to reduce my risk. And now I have two stops on this one. One is at 26.24. And the balance is at 25.42. So, that's the way I like to do it is if I get a quick move, I take a third off to reduce my risk. And then I look at the most recent relevant higher lows on a shorter term time frame. So the midday pullback today came right to the 2-day volume weighted average price. To me, that low is an important near term low for the way that I trade my time frame. So I'm sorry. So I got stopped out of that. I didn't even realize that. What I'll do on that final third, I should say, is raise my stop up to underneath that low, which is 25.65. So I'm going to put my stop on that final third at $26 and 53. What's the slogan? 65. So I'll put my stop at 25.63 on the balance. So if I get stopped out there, it's still a profit. And, if I can make 3% in 2 days, I'm going to take it and move on. I'm not making a long-term macro play. To me, it's all about swing trades. I'm also short Chewy as of today. Chewy was a real nice breakdown, actually, from 41.15. I covered a third of that one with a gain of $2.55. And my stop, I will be lowering. I will most likely put half of my stop at 30. I haven't looked at this yet. 39.62, and then the balance at 38.95. So if I get stopped out there, it's still profitable, and playing a really, really tight defense on these plays. So, that's I had some. Actually, I had. What did I trade long? I was looking at, and I'm still looking at ISEE as a long, and then I had mentioned. What was that one? It didn't trigger yet, and it was kind of failing earlier in the day. TENB. Um, TENB. Yeah, that's just still not ready yet. Some longs I have an eye on. I would say, BTU, if energy remains strong, that this might have one of those, kind of crazy little run ups. It's got that crazy personality that it pulled back from 27 to 21, and here it is at 23. And then, if it were to pull back and then kind of slingshot higher, that might be of interest in the next day or two. CEIX was another one, another energy name that looks like it has the potential to get going again. And like I mentioned, ISEE, it's a biotech, so it's really speculative, but it's, you look at that daily chart, it's a nice little inverted head and shoulders pattern, and, it holds up well. I would trade that with smaller size because it is a biotech, and I don't, really have much trust for those. HBM is a mining stock that started getting going today. It's maybe a little bit, would be chasing it here a little bit. I think that SILV, if it can get above about 975, that one might get moving. This is Silvercrest Metals. So there's a few of the names I've got an eye on, as well as OIS. I mentioned that one last night. I didn't get involved in this one, but the weekly chart looks like it could go. I mean, with oil the way it is, if it gets back above today's high, you could probably set a stop near about 7.5. I wouldn't be surprised to see this thing make a run, to through last year's high, which was about 9.5, 9.5. I think that could be a quick one, OIS, but I'm not in it yet.
Okay, awesome. Any others you want to add?
I mean, I could go on all day with ones that are on my watch list.
A lot of open positions.
Oh, no other open positions. That's it.
Okay. Question here. Somebody asked, AMC is a potential short. And I think the reason they're asking is because 3 hours ago, the CEO announced that AMC is going to start accepting Dogecoin and Shiba Inu. However, stock really hasn't moved, to be honest. It went down, actually, and now is basically flat, but the whole market's rallying, so I think it makes sense why it came back up. But basically, a lot of people are looking at AMC to just finally, kind of fill this gap to 12.
Yeah, the path of least resistance is lower. I mean, this is clearly a broken name. The only issue with this one is it trades so many shares, average of 42 million shares a day. So it takes a lot to move it. And I think that the short side is probably pretty crowded in here still. That, we know the shorts have been squeezed in here, but what they don't talk about is that it's also been kind of a perpetual short squeeze machine. That, that you don't want to short this thing as it's breaking down necessarily, but, after a relief rally, and then it rolls back over. So you want to short it from the shorts who get squeezed. For me, if I wanted to get involved in this one, I'd think maybe buy some puts, but they're probably so darn expensive that it wouldn't make sense there either. Sometimes the obvious play isn't the most, the best one. I'd rather short APPS or CARR or IAC, below today's low.
Honestly, the puts aren't terrible. I mean, the implied volatility is kind of rough. It's at like 110 to 120 for most of them. But yeah. I mean, you could
I think that would be the better way to play it.
You could get next week out AMC $13 puts at 120 implied volatility for 24 cents a piece. So just something, just something to watch. Brian, I want to be respectful of your time. Of course, would love to keep going. What's your schedule like today?
I could do 10 more minutes.
Okay, perfect. Awesome. Evan, I'm probably going to bring you back in here to drop a couple more names. While we're doing that, real quick, if anyone in the audience is coming in from my audience or Stock Market News audience and you haven't already become familiar with Brian, he is one of the best accounts you're going to find on FinTwit. Is super, super transparent with his charting, his trading, has been coming on more spaces with us, has created technical analysis indicators that are widely used. I use them every single day. Just hit 200,000 followers the other day and is, of course, verified and a CMT. I hope this is enough reasons to convince you all you should be following Brian. He is a great follow on here. And then if you love spaces, Stock Market News, killing it out here. And I'm doing my best to, host 20 to 40 hours a week of content and just continuing to bring stuff to the table. So hope everybody takes that to heart and gives Brian a follow, and make sure to check out the rest of the panel. All right. Stacky, I saw you came up too. Did you want to say something?
Hi, I just want to say hi to Brian. I'm fangirling right now. So I'm a VWAP trader, and I checked out a lot of his information on VWAP, and I frequently watch his page for very good information. And I just wanted to say hello.
Hello.
Yeah, she me like 45 minutes ago. I was like, oh my God, Brian's on your space.
I'm supposed to be in another spaces, actually. I just stopped. I told him I have to leave for a second just to say hi to Brian, and then I will be back soon. So yeah, I was in another space.
Love it, Stacky.
Hello, Stephanie. Nice to meet you.
They call me Stacky Robinson, like Jackie Robinson.
Oh, Stacky. I'm sorry. I just put my glasses on and realized I read it wrong.
It is okay. Trust me. They get it wrong the first time and they get it right every time afterwards. So it was very nice to meet you. And I'm looking forward to, just seeing you around and watching all your videos and all the information you have to share.
Sounds good.
Awesome. Thanks, Stacky. All right. Stock Market News. Got a couple more names you want to put out?
Yeah, so normally I love to try and throw over some stocks on the 52-week high chart, but it's pretty barren today. So my choice is oil stocks or oil stocks. So we're going to throw you Chevron, CVX, and Occidental, OXY.
CHV, Oxy, and what was the middle one?
CVX, Chevron. And then Occidental.
Oh, CVX. Okay, gotcha. All right, so CHV, or wait, CVX, you said. CVX, it's just had this massive run. It's tough to chase it up here. It's clearly in a beautiful uptrend. And I would have said it's, getting extended a week ago as well. So, use that as a reference point. But, when they go up, as this one has, 9 out of the last 10 days, it looks like, and experienced a run of this percentage in a stock of this, mega cap stock, it's a highly unusual, move. I think that yesterday's low is a great place to protect your gains against. Ride the trend if you're in it. And look for, shakeouts like yesterday, and as they resume back to the upside for places to get back involved. But I can't look at it and say I would buy it here. Oxy is probably a little bit better in that it's just consolidated the last 3 days. Back above today's high with a stop below today's low. If it did that tomorrow, then it might be worth a trade, but you'd have to, again, keep your stop pretty tight, just given the 50% rally it's had in the last 2 weeks. As I mentioned, I like, BTU, I like CEIX. Even Denbury is kind of starting to look interesting. DEN, it's not quite there yet. And MMP, this is one that's Magellan Midstream Partners. It's a limited partnership, which means they pay a large dividend, but they transport, store, and distribute petroleum products. And this one hasn't really moved yet. It's got a good look to it. Some of the other MLPs like PAA and PAGP are names in the oil that kind of look interesting. But you said Chevron, you said Oxy, and again, what was the other one?
Those were the two.
There were two. Okay.
I could always throw you more, but I don't want to steal from the amazing host that is Gav. I know he always has those incredible amount of questions lined up. I don't want to take any of his, so I'll give it back to him.
Okay, I'll pull it back in. I'm just going to take a couple more from the tweet that we put out, and more people can comment them on there if they want. I see Wolfie just commented Rivian, if you want to take a look at that. And in addition to Rivian, we can take a look at, you know what, let's do Rivian and AMD.
Okay. Rivian hit, it didn't hit another new all-time low today. It came close to it. It's just a broken stock, guilty till proven innocent. They shorted it to the public at 78, meaning they came public at 78. And for whatever reason, it got up to 180. I can't imagine what people were thinking up there if they're still holding it. But, it's in a downtrend. It's stabilizing from, Tuesday to today. But that's not much of a reason to buy. It's something I would just completely steer clear of, or look for the next rally to roll over and short it. And AMD, flirting also with that volume weighted average price from January of 2021. It's trying to, it's turning neutral in here maybe, but that's not a reason to buy a stock. Again, if they don't scare you out, they'll typically wear you out. It's at the low end of this range. Perhaps it bounced up to the 20-day moving average near about 115. I wouldn't think it's likely that it would move much beyond that if it does get a bounce. But to me, it's just kind of, it's kind of like Tesla. It's just sitting here. There's better stocks to trade out there. To me, sometimes it seems like people get hung up on, the big name stocks. In a lot of times, when they look at them and they look like this, they're kind of in a spot that, you're just better off avoiding it most likely. It would make most sense to me. Let it do its thing unless you're in there trying to make short-term trades. Yeah.
Awesome. All right. Okay. Let's do one or two more here. You know what? I don't think we've really touched in on the Qs and SPY. If you want to go over those.